So hello, and Mahindra Finance is a part of Mahindra and Mahindra Group, a very reputed business group in this NBFC business for many years. In fact, I'm happy to inform you that Vivek, your company has given very good returns to the investors in 2022, almost 54-55% return only in 2022. And today in our score, Mahindra and Mahindra Finance is a buy based on our 4 dots. That's quality, valuation, recent quarterly financial performance, and technical. But why we are talking about NBFCs, and if you look at why this sector is become little more buzzing and more exciting, purely because of the complete, there is a huge fancy for the sector. Why everyone now thinks that if one of the way you can create wealth from the equity market, then you should be in company like in the sector like NBFC. Why? Because it could be next Bajaj Finance kind of stuff, and that makes everyone little excited about the thing. So we'll get more insights because it's a challenging time for the NBFC also, if you look at it in that sense, because on one hand the rate of interests are going up, and that's not something very happy sign for the borrowers. And if they are not able to borrow, then where would the money would come from the NBFC? And second thing, historical, that has been a trend that whenever the rate of interest goes up, NPA level goes up. Whether that's going to happen going forward or not, we'll get all these insights from the Vivek. But before that, let me just take you through what is our IP suggesting on the NBFC sector. And if you look at it for the September quarter, 70% of our NBFC company, that is in Nifty, Nifty Finance, 70% of the company has given positive, what we call, let me select the sector now, okay. If you look at it, 70% of the company has given positive CFT result. And if you look at as compared to what it was there for the quarter ended June, it was only 55. So in other words, the complete NBFC space is showing a positive trend, and that's a very good thing to look at it. Even if you look at the Nifty Finance returns index, in 1 month it's up by 2.11, but in YTD is up by 12%. And in 3 years, it's up by 35%. So does this trend continues going forward or not? We can all make conclusion based on what we are going to discuss with Vivek. So once again, thanks a lot, sir, for accepting our invitation and be part of this exclusive show. Let me start with the very basic question I have, because you have a lot of focus on rural and semi-urban part of the India. And when we listen to the story or the commentary from the FMCG and the consumer durable companies, they do talk about there is a stress in the rural economy. How far, and the RBI governor recently said in a monetary policy, it started improving. Is it really improving? What is the ground level feeling that you are getting from your business associates?
So first of all, thank you for hosting me today. So yeah, I think it's a paradox that needs to be answered or peeled a bit. So the hypothesis that I have is, if you look at the FMCG sector, whether it is durable or non-durable FMCG sector, it's a highly penetrated sector. And any growth of an industry like FMCG comes from either increase in the households or increase in the consumption within that household. So, and most of these items are items of daily consumption, whether we are talking about durables or you are talking about non-durable FMCG products. So, if the penetration is high, and if the household penetration is also high, and if the consumption is already high, the growth is unlikely to come in a swifter clip, I would say. And when on top of that inflation hits you, the consumer does two things. A, he titrates the consumption. Two, he downgrades, or as a result of which from a large pack he will go to a small pack, or he would titrate the consumption, which then impacts the overall growth of the FMCG industry. even in case of durables, if you have a washing machine at home, you're not going to consume one more
That's true.
washing machine. I think that's how an FMCG industry would differentiate itself from an NBFC industry.
So you don't see any kind of a stress happening in your business because of the rural stress?
No, not really, because if you look at where does Mahindra Finance play? So Mahindra Finance plays in rural and semi-urban space. So in the rural and semi-urban, which all constitutes almost 75% of our portfolio, my customer or my borrower is an earn and pay customer. So he will buy a vehicle, and of course, sorry, I missed to mention this, but 96% of the portfolio that Mahindra Finance has is vehicle finance.
Yeah.
And therefore, if the customer sees demand and if he sees good prospects of cash flows accruing from ownership of that vehicle, he is going to buy that vehicle. And therefore, then he will come to a player like Mahindra Finance to finance it. Now, if you look at the last 1 year, and probably we believe it's going to last, that trend is going to last for the next 2 to 3 years, running right up to the union elections.
Okay.
The government is going to spend a lot of money on rural infra as well as the other infrastructure projects. The case in point is a very recent announcement that the Maharashtra government has made on multiple projects that it is going to embark on modernizing the infrastructure in the state. Yeah. So if the government is going to spend both on agri as well as on rural infrastructure, it's going to create jobs. At the same time, it's going to create a lot of mobility in the system. And if there is mobility, both of people as well as of goods, there is money going to be made by those operators. And if they are going to make that money, they are going to buy those new vehicles. And that's where the role of Mahindra Finance as a vehicle financier becomes very evident.
Okay. So one, you are saying you did not see any impact because of rural stress, because the people, those who borrow money from you, are earn and pay. And number two, you do believe that government spending more money in infra till at least till general election of 2024, you don't see much of an impact on demand.
Yeah.
But how does this, RBI have been really very, very fast. I think one of the fastest rate hike. In April, we had a repo rate of 4% going up to 6.25, which is one of the fastest in the history of RBI in the recent past. Did it impact the demand for the loan, or people are a little reluctant now because, if I take loan, how am I going to repay it? And you don't know what would be the future rate hike. Is it playing in the mind of your borrowers?
Now I think for me to answer that question, I will have to look at it segmentally. Otherwise, I will not be able to give you a proper perspective.
Okay.
So if you look at cars as a portfolio, you would remember that during pandemic, the overall supply of the vehicles was a bit constrained because of the chip shortage.
Yeah.
So now, as the supply chains are improving and the problem of chip shortage is also getting resolved, the supply of the vehicle is increasing, and therefore the pent-up demand is now getting satiated.
Yeah.
Both at the higher end as well as at the earn and pay.
Yeah.
Earn and pay end. So that is so far as the car segment is concerned. If you look at the tractor segment, we have had a great run. The rain gods have been very, very, I would say, kind to us.
Yeah.
And therefore, the agricultural sector has been doing well over the last 2-3 years, which augurs well for the agri output, which augurs well for the cash flows that are generated by the agri as well as the agri-allied sectors, and which means that the tractor demand has been quite robust.
Wow, okay.
In fact, rewinding back to Q4 of last fiscal, the overall prognosis for the tractor growth in the current year was in single digit.
Okay.
However, if you look at the first half of the current year, the tractor industry per se has grown at a double-digit growth rate.
Oh.
So which then means that the financiers, and we are a predominant player in the tractor financing sector, we also do well.
Okay.
The third big segment in the Indian vehicle industry is the CV segment. Even there, we will have to segregate between the heavy commercial vehicles and the small and medium commercial vehicles. The small and medium commercial vehicles are more linked to mobility of people and goods.
Yeah.
So is the case with heavy commercial vehicles also. But I would say that in the heavy commercial vehicles, it is the fleet segment that has done better as compared to those operators who ply one vehicle or two vehicles or five vehicles.
Okay.
So, because the capacity utilization has now been picking up in the heavy commercial vehicle, and the large fleet operators are the ones who will call the shot as well.
Yeah.
So it is the smaller players who you would typically find them on the sidelines, but even there, the demand for the used CV is on the rise.
Wow. Okay.
Because what is happening with the inflation, the cost of the vehicle has been going up. The fuel rate has already gone up. To that extent, the small operator will not be able to pass on that cost rise to the customer. So then what does he do? He says that instead of buying a first-hand vehicle, let me buy a second-hand vehicle and reduce my cost of capital.
Yeah.
And that's where the demand is so far as the small operators are concerned.
So basically you are saying the demand is coming more from the second-hand vehicles financing than the first-hand vehicle financing. Is that my understanding right? As far as commercial vehicles?
For the smaller operators.
For the smaller operators.
Yeah.
Okay. And you give a very interesting insights about the tractor industry is doing extremely well, and the demand is that Rabi Crop is started sowing and it's up by 7% or so. But there is a fear that because this time the climate condition is not so conducive for the wheat to, because the winter is not at its best actually. Do you see that could be a grey area for players like you and the tractor industry, where if for some reason if the Rabi Crop output is not so good, will it impact the demand for tractor in number one? Number two, the vibrancy within the rural economy is getting impacted, and you get almost 30% of revenue from the northern belt where the Rabi Crop is the highest.
So now I look at it this way that when it comes to tractors, typically a tractor owner will not use it only for agri.
Okay.
He will also use it for various contracting segment also. Because unless you are a very large agri farmer, wherein the tractor usage will be only to ply in his large agri fields.
Oh, I see. Okay.
So typically you would find the source of income for a tractor owner to be both agri as well as non-agri. Number one. Number two, so far as wheat is concerned, after the Ukraine war commenced, there was significant export of wheat that happened. So what I understand is the government is committed to buy the wheat output through the official government mechanism from the farmers. MSP. So I'm quite sure that the government is going to promise a MSP such which will ensure that the agriculture is.
No, my question is the output is less, then what happens?
No, my answer is the first one, that it is not only the agri usage.
Okay, so that would
also the contracting usage. So probably it will act as a hedge.
A counterbalance kind of.
As a hedge.
Okay, good. But did you see, because you also have a housing finance company, sir, one of your subsidiary, and do you see any kind of people are opting for longer duration, or there is a default because of rate of interest has moved up?
Okay, so far as the housing finance subsidiary of MMFSL is concerned, we operate in two segments. The first segment is the rural housing segment. So what is this segment? This segment is, I am a laborer. I am living in the rural area. I have a small house and I have taken a 1 lakh or a 2 lakh loan to build another room adjacent to the room I am staying. or to build a chat.
Hmm.
Okay, so that is the kind of loan that we finance in the rural segment of rural housing finance, which is about 70% of my total portfolio in the rural housing sector.
Your ticket size is maybe 1 or 2 lakhs.
1 or 2 lakhs.
Okay.
The balance 25 to 30% is the affordable segment. So these are the customers who are typically having government jobs or a private sector job, or maybe a shopkeeper in the tier 2, tier 3 towns of rural India.
Okay.
So this is exactly, so the characteristic of my loan portfolio in Mahindra Rural Housing Finance is very unique.
Okay.
Plus, in the rural housing finance, the rate of interest that we charge is in high teens.
Okay. Okay.
Yeah, high teens, and therefore, and the ticket size is lower. So there the delinquency happens not because of agriculture per se, because these are small households.
Okay.
They may not be large. They may not be large owners of land in that particular area.
Okay.
Yeah.
So not such kind of a delinquency that you have seen.
No, I wouldn't say that. So in the rural housing finance, in the segment of rural segment, we have been experiencing in middle teens delinquency in terms of the the net NPA, sorry, the gross NPA.
What was it previously before this rate hike in April 2000?
No, not per se. Because of the rate hike, there has not been much
okay,
of change.
okay.
So there is a structural issue there which we are trying to solve.
Okay.
Wherein there are certain geographical segments that we will avoid. Then there are certain ways we had, I would say, structured the contracts which will need to change. So those actions have already been taken. There are aggressive settlement schemes that we are running so as to solve the contracts which are sticky in nature.
Okay.
And going forward, the focus is going to be a lot more on the affordable segment, because while the IRRs are moderate as compared to the rural segment, it has a much better promise on the ROA.
Okay. There is one interesting comment. One of the employee or the professional from the luxury car manufacturer said that people are instead of buying cars, because you have a lot of exposure to auto loans, people are doing SIP. Okay. How is it the scenario at the rural level? Is the people are more, are they not spending money, not consuming the product, and they want to go for SIP product like this? And number one. Number two, you also raise a lot of money through deposits to fund your lending operation. How SIP is becoming a little problematic for player like you in NBFC space to collect the money at the lower rate of interest?
Sorry, I'm not very clear about your question. If you can.
Okay, so the one of the leading manufacturer of cars, he said that people are, instead of buying cars, they are putting that money into SIP in the mutual fund.
Oh, okay.
Did you read that? Okay.
Okay.
So he said, did you see any kind of a scenario where people are postponing their consumption and investing in product like SIP?
No, in fact, I think if you were to, if my disbursements during the current year were any indication, at least we are not experiencing that, because there has been a significant uptick in the disbursement in the current year vis-a-vis last year.
Okay.
We have been growing, we are almost doubling our disbursements in the current year as compared to last year.
Okay.
And there is a reason why it is so, because we are focusing on the mass affluent segment, which are the cars in the upper price tag, I would say, wherein we are participating probably at a lower IRR, but ensuring that we get entry at the dealer location. Once you get the entry, then we are also able to sell cars, finance cars with an IRR which is much higher than what we would otherwise offer to mass affluent.
So you did not see any kind of a slowdown there in the auto loans also?
Not at all. In fact, our growth in the current year in terms of disbursement, I would say, has been quite broad-based across the vehicle segments of cars, utility vehicles, tractors, CVs as well as used vehicles.
Okay. And how about this cost of borrowing money? Has it gone up for you people? Of course, it would have gone up because the repo rate itself has gone up. And how difficult it is for you to now, because everyone is chasing the CASA deposits, am I right? And if someone put a CASA, because the money is the same, you need to basically find a way, how do I lure him from moving away from CASA to come to me and give me the money? So how difficult for you as an NBFC?
So if you look at my my source of fund, about 10% of what we borrow will be through the FD route.
Yeah.
But we also depend a lot on banks. We also depend a lot on market borrowings.
Okay.
So what we have done in the current year is, or rather, to build that context, if you look at H1 of FY21 and the whole year of FY22, the entire country has experienced a very benign interest rate cycle.
That's true.
So during that period, given the balance sheet strength as well as the brand, we are able to borrow at very, very fine rates.
Okay.
And therefore, in the current year, while the cost of incremental borrowing is definitely higher as compared to what it was, say, in Q4 last year, the full impact of that on the weighted average cost of the entire borrowing book has not yet been felt fully.
Okay. Okay.
And therefore, we have chosen not to pass on the entire cost to the customer.
No, so that is for Mahindra Finance. As a sector, how do you see? Is it?
No, so I'll come to that. So your question on CASA, if you see, very funnily, the banks haven't really increased the rates on the CASA
they have
deposits.
Not. Yeah.
But of late, because the credit growth is far ahead of the deposit growth, the banks have now started offering on bulk deposits a much higher rate.
Okay.
Which at some point in time may also reflect itself on the term deposits at retail level. But it has not yet gone up significantly so far as banks are concerned. But as you said, we are vying for the same money that the customer has a choice for. So not just us, but all other NBFCs who are deposit taking NBFCs have been taking the deposit rates up. And we are not an exception.
Okay. Okay. Yeah. So this question is for the industry and not for the Mahindra Finance. Because of higher rate of interest and the way it has gone up, do you see the NPA level rising for the sector, not for the Mahindra Finance? And number one. Number two, the pace of growth of disbursement that has happened, because we have seen one of the best growth in terms of, because it's a benign rate of interest, people had a reason to borrow money. Do you see the impact of higher reflecting in these two aspects?
So end of the day, the NPA levels will rise if and only if the customer's ability to repay the loan is suspect.
That's true.
Which in turn is a function of the cash flows.
Yeah.
Which in turn is also a function of the overall economic activity, especially in the rural and semi-urban area, for most of the NBFCs, because NBFCs would typically play in those.
That's true. That's why the needs are higher.
Those areas. So my hope is pinned on continued government support on infra as well as agri over the next 2 to 3 years. Rain gods continuing to be kind to us.
Yeah.
So if these two macro factors are kind of taken care of, I am not expecting NPA levels to rise significantly unless there is a pandemic event which impacts the whole country.
That's a black swan event. Okay. Okay. And how about the loan growth? Because retail has been the very one segment which has been the real booster for the. How do you see the retail loan now panning out?
At least we are expecting our loan book, and I would.
No, I'm just saying as an NBFC.
Yeah, I think a double-digit growth in the loan book over the next 2 to 3 years is something that can be reasonably expected.
Oh, double-digit. That's a good one. Okay.
Yes.
Okay.
Yes.
And you know, the fintech has really come up in a very big way. What is the kind of challenge it poses to the NBFCs and also banks? And RBI governor recently made a statement, or deputy governor of RBI made a statement, that UPI should have been with the banks, but it has given away to the fintech companies actually, UPI payment gateway. So how do you see fintech playing a role in the complete NBFC space, and how do you basically, what is the industry is doing to basically counter that?
So I would say it's a competition as well as an enabler. Because what fintech has shown to the world is there is a way to digitally underwrite a loan.
Yeah.
The advantage that bigger NBFCs definitely have is the distribution that they have established over a period of time. If they can supplement the distribution with deployment of digital tools, both for underwriting as well as collection, I think they have a formidable combination. I would call it phygital. So they are physically present
and as well as digital, using digital.
Digital, yeah. So I would say that competition is definitely here to stay. Bigger NBFCs have the advantage of strong balance sheet. Most of the big NBFCs come from large corporate houses, so they also enjoy the parentage and patronage of very respected brands.
Yes.
They also have the wherewithal to invest behind the digital tools required both for underwriting as well as collection. So I think we should not be overly worried about the competition that the fintechs are posing.
So you don't see much of it?
There will be competition, and I think it's
manageable.
A good competition to have, because that will also keep us on the toes.
Perfect. And you are too much focused on rural and semi-urban, and there's one sweet spot for any NBFC is a gold finance. You don't have any presence, any specific reason that you don't see much of a, just trying to understand the perspective about it.
No, so not that we have not tried our hand. We have once tried our hand in the past. So probably the design elements were not appropriate. And that's the reason that we had to withdraw from that space. If you look at all the gold companies, they are very regionally concentrated. You would hardly find a company which has a national presence with the gold loan. So we will have to pick and choose our geography. But once we choose that geography, we will have to be concentrated in that geography, so as to reap the benefit of that concentration. So is it completely off the table? I would not say that it is completely off the table, but is it our priority in the near term? My answer is no.
No. Okay. So I think we have almost half an hour in discussion. Jason, can we just take a few questions from our viewers also?
Yeah, sure. I'll just start off with this first question. This is by Sateesh. He says, Dear Vivek, it's really good to see you on Markets Mojo. This helps the Markets Mojo family to understand more from your rich expertise. We would like to know your views, especially for 2023. And is budget going to be a game changer?
You're almost asking me to be an astrologer, but I will try my luck. So I feel that in the context of where the geopolitical scenario across the world is, India is very strongly positioned today in terms of its own balance sheet ratios. And therefore, number one. Number two, some of the recent state results have once again proven that a government which is pro-growth and pro-inclusive social development probably will get a mandate to for the next 5 years again. Which then leads me to a hypothesis that leading up to the union elections in 2024, the government will spend significantly on infrastructure, both physical infrastructure as well as social infrastructure. The buoyancy in both the direct tax as well as the indirect tax inflows gives the government the wherewithal to spend this money. So I believe that the budget that will get announced in February will continue to provide further fillip to capital investments in the country, and that augurs well for the overall economy. Because we are one of the very few economies in the world who are poised for a growth in excess of 5%.
So Vivek, I just extend on that. What is your wish list from the budget? If I have to give you 3 wish lists, what would be that?
So the first wish list I have is if something can be done to bring the interest rates down.
But that's not the domain of the budget. So.
I know it is not the domain domain of the budget. But my wish list would be the government should continue its focus on infrastructure and capital formation in the country.
Okay.
I think government has already done a few things right in facilitating investment in the country by incentivizing it through Make in India or providing those production linked incentives.
Yeah.
The other thing I'm not sure whether the government can do is to increase the flow of funds into the country. So
More FDI and more FII.
yeah, so sometime back those MSCI linked inflows.
Yeah, okay.
So but today it is not possible because of the demand from the investors that it should be tax efficient. So that is something that the government so far has not entertained.
Okay.
But if government is in a mood to entertain that, there can be significant inflows of capital into the country, which in a way will, I would say, soften the interest rate table in the country.
So one wish list from the NBFC as a sector. Rate of interest to sir छोड़ दो because RBI कर लेगी वो तो. As an NBFC sector, what that wish list you have from the budget?
So I would say the focus on capital formation and infrastructure.
Okay.
Because that sets the ball rolling for demand.
Okay. There's a very interesting question here, and which is more future looking, is that you have too much exposure to auto loans.
Yeah.
And EV is going to be the name of the game.
Yes.
How that's going to impact the complete business like yours?
So I would like to answer it in two parts. So the observation is right that 95% of our business today relies on vehicles. So a year ago we had put out what our strategy should be and what should be the look and feel of our business by FY25 end. So what we aspire to be is about 15% of the portfolio by FY25 should comprise segments which are non-vehicle.
Non-vehicles, okay.
Non-vehicle. So primarily the SME segment, the leasing segment, as well as the unsecured consumer finance. Consumer finance segment. Within the vehicle segment, we would like to diversify further by at least having a 10% of the vehicle segment constituted by what I now call as mass affluent.
Okay.
Because while it will come at a lower IRR, which we are quite cognizant of, it will also bring in asset quality which is far superior. It will also bring in a customer who is going to pay me digitally, where the cost of collection is going to be almost nil. So if you are able to do this, I think we will be able to create a balance sheet or have a balance sheet which is far more stable with less volatility, because that has been one direct feedback from the investors that your performance has been quite volatile. However, I'm proud to say that starting Q2 last year, we have had sequential improvement in our performance and especially on the asset quality. And I think that is something that the market is now rewarding us for.
Okay. So EV is not a challenge. In fact, it's an opportunity. That's what you're saying.
It is definitely an opportunity. However, in EV, how will the residual value pan out? Because nobody has tested that today, but we will learn.
Okay.
Yeah.
And since you talk about digital, there's one interesting question coming about the digital rupee. How this is going to impact the complete NBFC business? Is this a threat to the NBFC business or banking per se?
I don't think so.
Okay.
Because my understanding on the digital rupee is it is cash in digital form. It is as simple as that. And therefore, in fact, the governor has gone on record to say that the anonymity of the transaction has to be protected if the e-rupee or digital rupee has to become popular. In fact, it is good for us because if my customer was so far paying me in hard cash, and for which he was my collection executive was either going to my customer or the customer was coming to my branch, and then my branch has to then deposit the same cash in the nearby bank branch. All this has cost.
That's true.
Plus there are safety issues.
Yeah.
So if my customer is going to convert his physical cash into tokens, which is e-rupee, and then going to pay me in e-rupee, I am happier.
Okay. So it's not going to take away the role that NBFCs are playing. That's what you're giving.
No, certainly not.
In
fact, I am also not expecting e-rupee to completely replace the cash.
Okay.
It is an alternative. In fact, if you look at the discussion paper that RBI has come out on e-rupee, one of the key considerations for RBI to bring e-rupee is also to save on the admin cost.
Yeah.
They are spending almost 5,000 crore rupees per
on
annum to
just
print.
printing that's true. And then distribution
add to that the distribution burden and the admin burden. So right now it is in a pilot stage. They have started with the wholesale digital rupee. They have also announced the retail digital rupee.
Yeah.
But it is yet to see light at the end of the tunnel. But it will happen over a period of time.
There is another interesting question is on the efficiency of your collection. How it has been happening? Is it improved, not improved? And how do you see the efficiency on your collection?
Okay. So if you look at our collection efficiency, the collection efficiency took a real beating in Q1 of FY22 because of the second wave of pandemic. So the first wave of pandemic did not impact rural as much as it impacted urban.
Urban, okay.
But if you look at the second wave, it impacted rural very, very badly.
Yeah.
And mobility came to a complete standstill.
Yeah.
And that's where our collection efficiency was impacted very badly. And that's where our NPS went up to as high as 15.4%. And that's where, knowing how the customer behaves, we went out of the way and gave a commitment to the market that whatever provision we had to make in the first quarter of last year, we will reverse 80 to 90% of that by Q4.
Okay.
Quite happy to say that 106% of that provision was reversed by end of the year.
Wow.
Which means that our closing NPA was lower as compared to the opening NPA.
Yeah.
Which in a way means that my collection efficiency kept on improving throughout. Even in the current year, in the first 2 quarters and in October and in November, our collection efficiencies have been very, very healthy, upwards of 95%.
Okay. And do you see that is sustaining? That's the question that...
In fact, I believe that the collection efficiency in December and in Q4 will be better as compared to the first 2 months of the current quarter. That is because H2 typically is a period where the cash flows are far better, especially in the rural areas.
So there is one question that is coming up and says that you did mention about the general budget, general election. And what has been a historical trend that you have seen in your business that really gives you to assume that before general election year, the disbursement was 100 rupees. Does it go to 110? Does it go to 115? Does it go to 120? That's the question here.
Yeah, so if you, maybe I'll use a surrogate, and if you were to go back and look at the period from 2010 to 2014, that was one of the best periods for the NBFC sector. We are expecting a similar period for the next 2 to 3 years.
So you are saying the outlook remains extremely bullish for the NBFC sector?
Yeah, it is definitely promising.
It's very promising.
Yeah.
Okay. Yeah, Jason, to you. I picked up many questions.
Yeah. This question by Shrikant, he says, what's your assessment of inflation and interest rates in the year 2023?
So what I feel is the RBI, both Fed as well as RBI, are coming closer to the peak of the interest rate hike. Whether 6.25 will become 6.5 possible, whether we are at about 4%, whether 4% will become 4.5% at the Fed level, possible. But thereafter, the rates should taper off in H2 of fiscal 24 is my personal view.
Okay, this next question by Dilip, he says, what's the impact on NBFC as the cost of lending is now increasing? Also, I appreciate your efforts to lend to the small borrowers in the rural area.
Yeah, so as I mentioned earlier, the cost of borrowing has gone up because RBI has taken up the repo rate by 225 basis point, and it has impacted the market borrowing rates for NBFCs, because NBFCs either borrow from banks or they borrow from market in the form of NCDs and ICDs. So the cost of borrowing has gone up. But I would say the approach of NBFC in terms of passing on that increase in borrowing to the customer has been a little more calibrated because of a very soft rate borrowing that most of the NBFCs were able to do in the preceding 18-month period.
Yeah. If I can take up one question, Jason, if you permit me to do that. There's another interesting question that has come is about the consolidation within the industry. Do you see a scope for NBFC where smaller players find it a little difficult because of, digital, investment in digital, doing risk assessment and so on and so forth. And the more and more markets will go to the larger NBFC and so on and so forth. Do you see that happening?
See, there are 2-3 angles to this. One is RBI has been tightening the grips on the NBFC sector.
Provisioning and other things, yeah.
So whether it is harmonizing the daily stamping in line with what is already prevalent in the banks, or the scale-based regulations that have now come about, where the regulatory framework is getting further strengthened for NBFC as a sector, which means that the cost of compliance and the expectations from RBI will only keep on growing.
Yeah.
Not all NBFCs will be able to afford it, and therefore the stronger will get stronger is my view.
Okay. So you do see a possibility of some amount of consolidation in a way.
Consolidation either by way of maybe some acquisitions, or if not acquisitions, increased market share for larger NBFCs.
Okay. That's okay. Take it. That's something which has happened in the broking industry also. Yeah. Jason, over to you.
Okay, moving to this next question, one of the investors asked, do you see boost in rural economy in 2023?
I would say yes, because the rural economy, especially on the FMCG side, over the last 6 to 9 months, has not exactly seen the best of the years.
Yeah.
But if the government continues to focus on rural to ensure inclusive growth, and on infra, especially physical infra, there will be cash flows coming into the hands of the rural masses, which means that the rural economy will do better. The joker in the pack is monsoon, which none of us are
experts on that.
That's
true. This is an interesting question coming from. Can you take this Dr. Hameed ka question, if you don't mind? Chip shortage. So he's asking, still there's a chip shortage issue. Do you see a scenario is basically behind us in terms of chip shortage, or do you still believe that's an issue to be grappled with for the auto industry?
I think the noise around this issue has definitely died down. So I think it is not as much an issue today as it was, say, 9 months or 12 months ago.
Okay, so is the waiting period as increasing, decreasing when how much do you give new fresh loans other than as compared to the second hand loans, if I have to really bifurcate between the auto loans?
No, so predominant part of our loans are fresh loans.
Fresh loans.
Yeah, and chip shortage hasn't really impacted the tractor segment.
It doesn't impact it.
So chips would typically impact the passenger
vehicles,
or the UVs.
Yeah, that's true because of the lot of automation. Yeah. Jason.
Okay, moving to this next question by Vinay. He's asked which geographical areas have been lucrative pan-India?
So I think our growth has been quite broad-based across the width and breadth of the country. So I wouldn't say that there is one particular region which is more flying. No, I think our growth has been more broad.
So you are saying it's more evenly grown.
Yes.
We'll take last one more question in the interest of the time, Jason.
Yeah, I'll pick this question by Sridhar. He's asked, how do you see the NPA and NBFCs as compared to banks? Is it manageable because the main financing to medium and middle class and below depends on lower bracket income?
So historically, in NBFCs, the focus has always been to lend to those who are unbanked or underbanked.
Yeah.
And therefore, the risk profile of the customer is always going to be slightly worse as compared to the risk profile of the bank customers.
That's true.
The other advantage bank has is because they also own the account of the customer, they can always debit the account of the customer.
Yeah.
Which advantage the NBFCs don't have. Having said that, if you were to look at the performance of large NBFCs on the gross NPAs over the last 1 year, you take any big name, you will realize that most of the NBFCs have been successful in bringing down the NPA numbers sequentially. And thanks to RBI with the new regulation of daily stamping, there is an added focus by all the NBFCs to curtail forward movement of NPAs from below 90 days to above 90 days. So to that extent, there is an extra constitutional focus on collecting while an overdue remains in a lower bucket.
Okay. So I'm getting tempted to ask one more question, Jason, if you permit me. Someone is asking, why are you so much focused on rural and semi-urban? Is there any plan with Mahindra Finance to go and come to the city and town where you can finance other people?
Then who will go to rural and semi-urban?
Okay, so you don't have a plan. Anyway, I think thanks a lot, Vivek, for sparing a time and giving a valuable insights about what's happening in this. I think a couple of key takeaways from what we have discussed today is that number one, the rural economy has started doing reasonably well. Number two, there is no stress in the NBFC, and despite the rise in the rate of interest, in fact, Vivek was suggesting that what the period that we saw from 2010 to 2014, I think something similar kind of period that we are going to see in NBFC space. And Vivek is clearly articulated his thought that next 2 to 3 years, there should not be any reason to worry. He don't expect NPA levels to go up. He don't see any problem in terms of the loan growth book with this with the industry. So I think we are ending on a very positive note. I think you have given a very good and one budget wish list. He says for the NBFC, the government should basically do more capital capex on the side, so that it basically flip the growth in the economy. Only one caveat that he said time and again is a monsoon god. What happens? I think that's going to be decided. What happens to the rural economy, what happens to the inflation, and couple of insights he gave is that tractor business is doing extremely well. So if you are invested in tractor stocks, I think you should look forward for the bumper numbers in the quarters to come. So with this, thanks a lot once again, Vivek, for sparing your time, valuable time, and be part of this vector of the sector. Looking forward to more interaction in future.
It's been my absolute pleasure. Thank you so much for hosting me today.
Yeah.
Thank you.